Well, gas prices are falling and people are finding extra money in their pockets. But if you think they're itching to drop that cash on a big screen television or a new entertainment center, think again. At least that's what our next guest says. Vitaliy Katsenelson is an adjunct professor of practical equity analysis at the University of Colorado, also a financial analyst at Investment Management Associates. Thanks so much for joining us, Vitaliy.
Hi, Erin. How are you? I'm
doing fine. And I want to get straight to this. Basically, we keep hearing, Fed President Fisher earlier this week saying lower gas prices are a shot in the arm to consumers. But you say not so fast.
Well, the low gas prices will help consumers' day-to-day spending. It's going to help consumers when they go to Walmart and Target because now they can afford to buy clothes, groceries, diapers. However, lower gas prices will not help consumers when they go shopping for larger, more expensive discretionary items like refrigerators, $2,000, big screen TVs, etc. Because that money is coming from a different mental account. It's coming from our home equity loans, which value has eroded over the last couple of years, well, last year at least, and now it's become more it became more expensive because interest rates have risen.
So basically, what you're saying is, let's just say I get $100, I win $100 at the casino, or I get $100 more in my paycheck as a result of the fall in gasoline prices. So I may or may not know it's exactly $100. You're saying I spend that money very differently.
Yes, the mental account is a term that comes from behavioral finance. It's a relatively new science that has been in existence for maybe 20, 30 years. And what economists found that, you're right, $100 won in the casino is going to be found money for us. And therefore, we're going to spend it in a more frivolous way, where the same money that's been inherited from our grandmother, we're going to take that money, we're going to take care of that money with a lot of care, and may even deposit in our retirement fund.
So home equity accounts, in your view, are much more like money that you might win at the casino. Debt is treated much more frivolously than hard-earned money in a paycheck.
That is exactly right. Exactly right, Erin.
So, Vitaliy, what does this mean in terms of what the markets have been doing? I mean, you talk about you expect some of the staples companies to benefit, diapers makers, Procter & Gamble or Target, and they have. But we've also seen surges in other stocks, Circuit City, Best Buy, the guys who sell the plasma television. So is the market getting this totally wrong?
Well, it's not over until it's over. It's going to take time for that to take effect. So it's going to take time before the pressure from the high interest costs from home equity accounts is going to trickle down to our spending in Best Buys and Circuit City and Home Depots. It's going to take time.
All right, Vitaliy, thanks so much for joining us on Street Science.
Thank you very much. Thank you very much.
Vitaliy Katsenelson joining us there. I thought it was an interesting concept to share with you about whether falling gasoline prices really are a panacea or not. Well, let's show you the major market averages, because certainly a lot of what's been spurring the rally we have seen as of late has been the decline in energy prices. We've got right now the Dow Jones Industrial Average at 654. We're less than 100 points.